What is going on, fellow market makers? Guys, I hope you had a fantastic weekend. This is an action-packed economic week for you. And guys, it's going to affect the market. So today we have the 3-year auction, the 10-year auction. The 10-year auction, I believe, is at 1 o'clock Eastern time. We'll see how well received it is. We are running record deficits, adding $1 trillion to the debt every quarter. Just to put that in perspective, we didn't have $1 trillion as a national debt as a whole until Reagan came into office. Back in the GFC, we had $6 or $7 trillion or $8 trillion as they start to do some of these stimulus packages. And now we are at $34 trillion, a 4X over the GFC. So this debt has to be sold. We'll see how well received it is. If it is poorly received, then you're going to have yields move up. However, lots of people, big funds, governments are buying our debt because it's also considered a safe haven. So we're going to see how that affects the markets. But the main market event is Wednesday. Powell comes out, the FOMC comes out, they announce whether or not they're raising rates. And guys, there's less than a 1% chance that they raise rates. That's what the market's pricing in. But I do expect a hawkish Powell to push back on the loosening of financial conditions. The question remains, will the market even care, right? We're going to look at the charts. We have our market makers special report coming out this week. Wanted to get it out today, but Lee wasn't feeling well this past weekend. Who would have thought the weather in Wales wasn't going to be very nice, but he's a little bit under the weather. So we'll have that out to you guys Wednesday. So this will be the only TA video for the week. So definitely check out that video when it comes out and let me know if you like that type of content. It will be a deep dive, big update on the Black Rhino event that's incoming. Guys, before we kick off the TA, I want to introduce to you Felix Zulauf. Some of you may have seen him on some podcasts. He doesn't do podcasts often, and when he does, everybody tries to grab him because he's been nailing the market movements for this cycle. So this first clip I'm going to play for you is him describing what the market's done so far. And you can see how accurate his predictions are. He also describes what he sees as a bull market and where we are in this bull market. And guys, and then the second clip, we're going to go over it, but the second clip, he's going to tell you what he expects to happen next. So I have some commentary for this. But Lee, let's roll the first clip. We'll talk about it on the other side.
First of all, I think stocks are overpriced, particularly the leader stocks are overpriced and excessively overpriced. The broader market is not as excessively overpriced as the leading Magnificent Seven. I said in late October, this was a medium-term low, and we will go into the third up leg. We had the first up leg. We called the low in fall of 22, and we had the first up leg, which we expected to be to around 4,100, 4,200. And then we paused, and then we had the banking crisis. And that triggered off the next up leg, the liquidity from 4,200 to 4,600, which I had trouble with because I did not expect it to run that far. And then I said in July, we have another correction coming, and it corrected into October. And that was the second up leg into July. And now we are in the third up leg. A normal bull market has 3 up legs. There could be secular bull markets when they are very powerful, could have 4 or 5 up legs. I think this is the last up leg because of the secular changes in interest rates and inflation. So this up leg runs into the first quarter. Whether it will peak in January, February, or March, I cannot tell at the present time. I hope to tell my subscribers when we are there.
So Felix believes we are in the final up leg of the market. He believes it's going to peak in Q1. And, I don't want to do a spoiler alert. So let's look at the second clip first. But this is what he's looking for now. Okay. So what he's looking for now, Lee, go ahead and play the next clip.
These current downdrafts, we had the first run up and now we have a correction, and the correction could be deeper than most expect. It could go down to 4,300 in the S&P. And after that, I think we go up to 4,900. So big move, big rally.
So Felix is looking for a retracement down to 4,300 approximately. I'm going to show you this on the charts because I have a sneaking suspicion he knew my mentor, Robert Fisher, who's also Swiss-based. Back in the day, and they're close to the same age. And Robert Fisher was my mentor for Fibonacci techniques because Felix looks to be using fibs, in my opinion. But we'll go over these targets, this 4,900 target, the 4,300 retracement, his Q1 peak. Very important. We're going to look at that in the charts and how that plays out. And after you get that Q1 peak, guys, he's talking about the market selling off below 3,500. He says 3,000. Okay. Why would that be important? Because again, the market has never put in a low prior to recession one time in market history, never a single time. And Felix is obviously aware of this. So he's looking for that big sell off after the peak. But let's go ahead and look at the charts and see what we can see. All right, guys, so let's see where we are on our lunar cycle here. Price on the S&P is at 4,600. Just a quick reminder, timestamps are in the video description. You can see the timestamps if you need to zip around. And as a quick reminder, if you intend to trade these markets, my friends, support the channel. Check out SimpleFX or BingX. All those links are special bonuses. Your first free month in our Discord, they pay for it. All that information is in the video description, and I'll pin Lee's Telegram in the YouTube comments so you can ask him questions about it. Let's go ahead and look at our lunar chart here. So tomorrow is the new moon. Will we get the topping action? Felix is also looking for, we have the full moon, the new moon, double top, three-wave structure sell-off. We have the full moon. This will be the new moon. Will we start to see some type of retracement? And Felix is looking for a move up to 4,900. I'm going to show you that on a clean chart, what it looks like. First of all, let's go ahead and look at the S&P on a 3-day chart. This is zoomed out, guys. So I want to show you this. We've been over this quite a few times now, but if you understand the signal wave concept, if you understand advanced Fibonacci techniques, you had equidistant waves here, right? 19% move up. This is your August 2022 high, and then a exact symmetry here, 19.3% move down. This is important because it allows us to use some different Fibonacci tools to look at targets and projections of where you can get to. And when you look at this, look at your 1618, 4604. 4604, and it took some time to get there. It took till July of 2023, almost a year of waiting after this top to get there. But this is where I posted a short in the market, 45.92, 500 bar drop, nearly an 11% correction. And of course, other shorts along the way, such as our 43.82 that I shared on YouTube for a 300 bar drop. And now we're back testing the 1618. Okay, we're right in this range at 4608. Overspill here is a 4682. The key events are going to be this bond auction at 1 o'clock, what the Fed says and does, and the market reaction to it, because these markets are definitely overheated. And you can see this clear double top. And furthermore, you also have to contend with this previous high of March of 22, giving you essentially a triple top pattern like you've seen on gold, a triple top pattern at the moment. And we could get a little bit more euphoria, guys. What I personally think can happen is if the market wants to rally, the CPI number, forgot to mention that. CPI comes out as well tomorrow. So you have the CPI number. If that comes out lower, look at more euphoria, 4609. Look, the 1732 is 4682. You could end up somewhere between here, 4640, 4650. At the top here, 4682. And then we have to see what Powell does on Wednesday. Does he try to slap down the market? And even if he does the market care? I still think the logical explanation here of what's going to happen, and Felix has a very logical case. The only difference I have with what Felix is saying is I need to see the retracement. If we get the retracement and we bounce up and we pull back and we bounce up and we take out our fractal, guys, this will be our way to challenge the previous all-time high, okay? The way to challenge the previous all-time high at 48.20, we need to have the retracement, see a recovery from the retracement, because to me, it's also if something breaks in the market, some geopolitical event happens, you can just quite simply have the retracement, come up, make a lower high, and you just made a double top just like you did here, okay? So I don't want to predict we're going to take out the new all-time high, and I don't want to predict it's going to roll over on this retracement and make a lower high. I want to see what the candles do, but I want to trade this retracement. So right now with CPI tomorrow, with Fed Chair Powell Wednesday, lots of events to look at to see what happens here in the marketplace. Let's go ahead and throw this on the daily and look at some other numbers here. And if we go ahead and look at our W pattern that we've been tracking here, right? Look at our W pattern. We've been oscillating and vacillating in this 40, 50 point range. Some members have been taking scalps here, but 4604 was your 1618. On the larger trend-based fib, 4584, you're at 4605. So look, my next level up from the smaller fib layout here is 4618 and 4682. I want to see what happens here in the next 48 hours, 72 hours with the Fed. We could see a euphoric rise somewhere in between here and then a beginning of a push down, or you could just see it roll over. We don't know because I can't tell you what the CPI is going to be. Nobody is supposed to know. I'm sure Wall Street knows, but nobody, us peons, aren't supposed to know, and we don't know what Powell's going to say or do. If Powell comes out dovish, guys, the market's going to rally. If Powell tries to slap the market down, the question is, does the market even care? But this same range remains the key range to look for this retracement. And the thing is, once we know where that retracement is, let me go ahead and show you this, then I can start getting target predictions just like we did off of this. But once we know where that retracement is, so if the retracement comes down, pulls up, comes down, pulls up again, we know where we can measure our fib. So let's go ahead and take this from the rally up to the rally here. This would be, in that example, a 50% retracement. But let's just look at this because Felix said 4,300. I know this guy's using fibs, right? My mentor, Robert Fisher, my Fibonacci teacher, he was based in Switzerland as well as a former Swiss money manager. So when you're looking at 4,300, Felix must be looking at the 618, right? Most commonly retraced to fib. So in that case, you're looking at price coming down. It won't come down in a straight line, but just to make this faster, up, down, pull back, right? Do this, take out that fractal, move up to the next level. Well, if this is the case, then we can get projections of where this would go. Once we know where this middle piece is, when I know where this middle piece is, I can start to do projections just like we did over here, okay? Just like we did over here. I need to see this bounce back up. We get this bounce back up to form a fractal and a pullback. We can start getting projections, but I would have, from some other fibs that I've done, I would possibly have somewhere 48, 42. Felix said 4,900, but just playing with the ideas at different levels here. We have no candles. I think that's totally possible, 4,900. I'm looking more in the 4,800, just barely edging out that all-time high if this was to play out that way and we had that momentum carry us into the Q1 peak. Be interesting to see, but again, priority is trading this because that's a 300-point drop if it comes down to 4,300, more than 300 points. And if it comes shallower to like the 486, it's still a very nice payday. It's a 43.66 at the 50% retracement and 44.20. So it's still a 200-point and a 250-point payoff if we can get this short, if we can get this retracement. And why is everybody you're watching probably talking about retracements? Because this is an extended rally that hasn't really pulled back at all. Lots of people are expecting some type of retracement. We still have bearish divergence all across the MFI here. Price kept rising as you had the MFI money keep flowing out of the market. But you know what? Retail's driving this. Zero-day options are driving this. They're pushing it up, but at some point you want to see this pullback, even if it bit shallow, even to 4,400, which again is still a 200-point trade, even to 4,400 to pivot out to the upside. And we can start looking at where that next level of resistance is. But overall, I totally agree with Felix with what's going to happen. I think that Q1, with the recession beginning to set in, because remember, the Fed is predicting our GDP to decline from 5% to 1.2% this quarter. And then the next quarter would most likely be the same or even slower. And that's going to shock the market, guys. In my opinion, it's going to shock the market, and you're going to start seeing people spending less and companies will make less money. But overall, it's that fear factor. Right now, the market's really bullish, but we'll see how long that lasts as the data prints. We don't have that data until going into January. So let's go ahead and move forward. Let's look at the NASDAQ. Similar here, similar concept. We don't have a signal wave, so I'm going to just use my Fibonacci. And again, why are we pulling it from here? We've been over this many times. It's your big, large W pattern, okay? Your W pattern to the upside. And look at your 1618. Just like we had the S&P go to 45.92, look what the NASDAQ did right at 15,579. And then what did it do, guys? An 11 or 12% correction. So right now we're struggling at the 16,135. We're at 16,132, the 1732 overspill here from the 1618. And we've been over this on previous videos, but it's important. You can see your 1618. I'm going to highlight that in orange and then put this down here. You're in this Wyckoff trading range. And what are you trying to do here, guys? You're trying to get your Livermore pivot to pivot out to the upside, take out this fractal and pivot out to the upside. So we have to see what happens with Powell, because this is going to be very important. There's your all-time high right there. And keep in mind, if we do get this retracement, right, this trade ends up working out on the S&P, it's going to work out as well then on the other indices because they're all going to move. But let's just look and see here on a 3-day chart where we have the fib retracement. And we'll just put at this current high here and just look at the 1618. You're at 14,871 on the 1618, right? Nice sizable retracement. So again, that pattern we'd be looking for is a sell-off down to say the 1618, a bounce up, a pullback. You like to see a lower high. That's basic TA in that sense, but it gives you the W pattern to take out the fractal and then challenge your all-time high. And if it doesn't do that, then it ends up doing something like this massive move down, move back up, lower high, boom, double top, right? That's what it ends up doing. That's your two options. That's why, to me, you don't need to be able to predict it. You just need to understand patterns. But right now, I want to see this retracement come down, either hit 15.37, 15,152 or 14,871. One of these three levels before we get this bounce, pullback, and then possibly more upside or a lower high. Either way, trades coming in. You have a trade at the current level you're at, the trade for the drawdown. Some people will be, I guess, more aggressive and possibly try to buy where they think that bottom is. If it comes to the 618, I'm definitely going to be looking at a bottoming pattern. And then, of course, we have the move up, the move down, and then the breakout. So there's going to be multiple trades coming here and future videos, multiple trade ideas. Right now, looking at the short for the top and the retracement. Let's go ahead and move forward. Bitcoin. Again, we had this nice 40% winner from the long I shared October 23rd, 40.55%. Let's go ahead and look at this on a clean chart. I told you this on Thursday's video last week. I don't think anybody's tracking the fibs the way that I am because I gave you this exact level. 44,190 at the 2618. And if you're paying attention and watch that video, that I told you I'm looking for a top in Bitcoin here, even if it's short term. And of course, you had a nice retracement all the way down, guys, all the way down to 40,403. And this just happened last night. But let's go ahead and do this from the peak. Oh, that's the paintbrush. Let's go ahead and measure this from the peak down to the low here. That's almost a 10% move down. And so Bitcoin right now on a 3-day, we're going to go to the daily. You're trying to hold the 2.236, which is 41,274 as support. And this is what you expect to see, right? So let's look at this on the daily, get more candles. So we had our run up, started to build our top, and then we rolled over, right? Now we have our move down. So that's your second wave. Your third wave will be the move back up. And what you want to watch is, does 44,190 once again hold? If it does, this is going to be the opportunity for those of you looking to go short on Bitcoin. when and if we do see this retracement in the S&P. See, there's a qualifier here. I'm not suggesting I'm going to short Bitcoin here at 44.2, and I'm definitely not suggesting you should do anything because there's no financial advice on this channel. I'm just telling you what I'm looking at and what I'm thinking of doing. But if I get this wave 2 bounce back up, this wave 3 bounce back up, and this holds at 44,190, I want to see this pattern. You guys familiar with this pattern? Yes, exactly. It's a double top. If it holds and the S&P sells off, this is an area that I'm very interested in. Not because, again, not because this move means Bitcoin's going back down to the 1113K, which is where I think it'll ultimately go when the S&P drops below 3,500. That's not happening until after a potential peak or this move down forms a larger lower high, right? Again, that would be that trade, just like on the S&P. So I'm tracking this with the markets, but this is my next trading idea. If we get the rollover in the markets for the retracement, which we should find out most likely within 24, 48 hours after the Fed meeting, you're either going to see a rally up with Powell or you're going to see this thing start to pull down. So I want to watch this and watch any retest. Bitcoin's at 41,523, and we'll see where this goes to the downside. And we have a double top formed on the MFI. Nothing yet really on the daily for wave divergence. So this is where you're at. If we want to go ahead and pull this, you can see that level 41 being used as support. Let's go back here. Just measure this breakout. Depends where you want to pull this from. This initial leg right here is a good area, as well as you could obviously, a lot of people just pull it from the low, but I just want to see this leg, right? This leg that came up for this move up, and just look at this. I mean, look at that. You bounce almost to the dollar off 40,402, which is a 382 off this initial impulse leg. So 40,402, and again, you came down to 40,403. Literally within a dollar, okay? So this fib is tracking nice. So if we do see this type of pattern form, three-wave pattern, come back up, give us a lower high, something to potentially trade, then I'd be looking at, what would your targets be? Well, the 50% retracement is 39. The 618 is at 37,720. So keep in mind, remember, this doesn't mean collapse. What this means, going down to the 618, same with the S&P, is more than likely you come up, you make this pattern, you start to decline, you bounce back up, you pull back, and then you're looking for that W where we can get targets for the next move up, or you're looking for that move to do this, right? Come back down, bounce back up, make a lower high, and then you just made a larger macro three-wave pattern. And these three-wave patterns can turn into five-wave topping patterns if you start going sideways. But again, these will be in future videos. But that's the initial move I'm looking for, back up to resistance, looking at 37,720 as a nice target, also the top of our pivot here. So that looks like a nice support level to either bounce up from, make a lower high, or begin to form our W to break out more to the upside. And what would the logical target be, guys, if the S&P does want to move up to an all-time high? Well, the 618 was your next level. Let's go ahead and look at that again really quickly. Actually, let's go back to the other chart and do that. The 618 was your next level. I believe that was at what, 48K? Let's just go ahead and pull that down from the all-time high. We'll pull this down and see where this bounces to, all the way down to our 15.5 low. 618 at 48,624. That's your next level. Could it go above that? Sure. We have to see what would happen and how high the S&P goes. If A, we get the retracement, B, we get a W that forms, and C, you take out the all-time high in the S&P in Q1, then I want to see what Bitcoin's going to do. But that's obviously your next level target, which is about 6,500 points away at the moment, or 7,000 points away at the moment. So let's look and see if this is the retracement or if there's more retracement to come on Bitcoin. Let's go ahead and move forward. Let's look at gold. And gold is tanking once again, boys and girls. And we've covered this exhaustingly, right? Again, 2075, 2075, 2075, close enough. Key resistance here in your Wyckoff trading range, 2075. You spiked up above it. You didn't hold 2075. The move to do was hold here, base, eventually pivot back to the upside. Take out your peak here at 2150. That's being bullish on gold. Being bearish on gold is what it's doing now, re-entering the Wyckoff range. Now, again, you do have higher low structures, in this immediate trend here. You have higher low structures, so you can come back up and potentially back test this area. But until you flip 2075, I'm not bullish on gold because I do believe gold may have more upside here, but gold will sell off just like it did in the GFC. It went down 34% with the markets. They moved to gold does great in a recession, post-recession. Entering the recession, it gets sold off. It's just done this over and over again in history. But many people like myself, I own a lot of physical metals. I don't own it to hold the value of it. I own it for other reasons. Such as it's actually money. But I do like to trade gold as well. But I just don't think this is anything yet, guys, to be super bullish about. I think the trajectory for gold is going to be after the market pull down with the recession fear. Okay, that's what the trajectory for gold is. And then you will see gold rise back up parabolically. And we can look at targets when that time comes. But until you flip 2075, this is bearish here on the 3-day chart. If we look at this on the daily chart, I really wanted this to bounce up more. You got a little weak 3-wave double top here. I mean, this was so hard to trade because of this big peak here, right? So you have this little tiny 3-wave chart. So maybe we can get this thing to hold a bottom. It's at 1980 right now. If you start losing this pivot here, which is at 1931, then you have to look out below, guys, at 1810. You'd be going retracing back down to where our initial gold short from 2055 up here dropped $250 to 1800, and now you're giving up a lot of this area. You're back at 1980. So you want to hold this immediate higher low trend and try to get a bounce back up here, retest 2075, maybe make a W off of this and try to pivot back out and get on top of 2075. That would be very, very key for gold. Let's look at the Wall Street 30, the Dow, the baby S&P. Have a trend channel here. You can see you're popping your head up above the trend channel. I don't have anything here on the Dow other than the sense that it's moving with the S&P. I don't have a particular fib layout that I really like. Our W pattern is between fibs here. The 2-spot 236 is at 36,442. You're at 36,318. Again, this is going to move in confluence with what the S&P ends up doing. If the S&P does retrace, you're going to see the Dow retrace. So it's just right now on the 3-day chart, you're just looking at topping candles. On the daily chart, you kind of have a sloppy double top 3-wave patterns, messy as you can see. So you have a little Wyckoff trading range here. This range is from 35,950 up to your current price, 36.3. So you're just chopping up and down here. Maybe we'll get a pattern out of this. Nothing yet in the daily that I really like, but we'll see if this 36,442 holds and if this ends up rolling over, or if the markets just get super euphoric with a really, really weak PAL. Let's look at the DAX. Again, the DAX 16,813. Let's go ahead and get our targets here. Our macro target on the DAX, 16,903. So watch the DAX at 16,903. See if this holds as resistance. You're $85 away from it right now. This is our larger Fibonacci target. This is the same layout, by the way. If this ends up topping in this area, we'll have to see if we get a retracement from the DAX, because your retracement on the DAX, if it gets to 16.9 and holds in that area, meaning it can go up and down, but if that basically acts as a line of resistance, the DAX is pumping. So this is going to be moving if the DAX keeps moving up. But your 618's down at 15.4, guys, and you're at 16.8. It's a 1,400 point drop. Goes up another 100 points. It's a 1,500 point drop, or slightly less when we move the fibs up a little bit. So again, 382 retracement, 15.9, 15.7, and 15.4 when the markets, if the markets decide to pull back, if Powell actually sends a little bit of a shock to the markets, we shall see. French 40, exact same move here on the French 40 for looking at targets. This gives us 75.75 at the 1618, which is you're almost there right now. This is a big trade for me. Posted this in the room as well. 75.75, a very large drop back in April. Back in April, this is an 11% move, an 850 point drop here on the French 40. So that's a trade that I did based off this wave pattern. Again, knew about this wave back in September of 22, waited patiently for it to get to target, shared the trade in the room, massive payoff in this, right? A lot of trading, depending on your style, I'm a swing trader, it just involves patience. People say, well, why didn't you trade this move? Why don't you trade this up move here to here? It just depends on your style, where you see something that you really like. And this was a trade that I really, really liked. It's one of my big trades earlier this year, and I was really, really happy with it. I still look back at it fondly, especially if I have a couple of bad trades that I don't like. I'm like, I remember that trade. But watch 75.75. The overspill here is 77.12. Again, your previous all-time high, your second all-time high here. So we'll see if you want to take out that second all-time high, move up a little bit more in the next 48 hours until we have the Fed, and then we see what the U.S. markets do. The UK 100, guys, I threw this in a trend channel. Again, this is just, very, very boring, this marketplace. You're in the bullish territory, but you're selling off some on the MFI. You have a little baby wave pattern here, maybe making a little double top. This is a very tight trading range. You could put this in a channel itself, okay? Very tight trading range. We looked at some fibs here on the UK 100. You could pull down from up here down to your low, and you got above the 618 a little bit, hit the top of your channel. 786 is 76.14, the 618 75.39. Keeping this, again, basic TA here, right? Just higher low structures, just a grind. It's just a grind, but I'll wait and see what happens with this. We have a bunch of British guys on the Discord. They do like the UK 100. I just don't see anything particularly interesting here, not setting up as much as I like to see, such as on the DAX or the US markets or the French 40, but it's always a good one to keep an eye on. And let's look at the NIC. The NIC is returning beautifully. We hit the 1618 beautifully at 33,777. And now we have this massive double top potentially forming. Again, it's a double top if it makes a lower high. And it's a breakout here on top of the Wyckoff range if it comes back, pulls back, and then breaks out to the upside. So that's always the joy of trading. But right now you have this three-wave pattern that's forming. There's your sell-off, your wave two. This would be your wave three. And what this wave three does, we shall see. So let's go ahead and look at this. Get a retracement level for anybody that likes to trade the JPN 225. Tradable on SimpleFX as well. 618's at 33,162, not quite there at 33,060. 786, 33,427. So I don't want to watch that 786, 33,427. And then, of course, your high here, your local high, 33,763. And this is your trading range on top of your multi-year Wyckoff structure that we went over the last couple of videos as well, right? So you want to see if this forms a massive double top, a smaller double top, and ultimately starts breaking down below 30,728, or if you're going to pivot to the upside and get some of these upside targets like 34,736. All depends on this immediate price action, making a lower high or breaking out and getting on top of 33,763. Let's look at some individual stocks. MSTR, this is Michael Saylor's company, heavily linked to Bitcoin due to the massive amount of Bitcoin he owns. We got all the way up to almost 600 at 599. Now you're down at 561. Again, this is really hard to trade until you know of a trend on Bitcoin, right? 599 and 561 is a great move. I mean, it's down 6.36% today. It's a great move. We're talking about an equity here. But until you see Bitcoin top and start to drop, that's what I'd be waiting for. Obviously, lots of gaps in this stock as well. So that's what I'd be waiting for, is to see what this cluster of crap does here on the candles, if it makes us a double top or something. And that's all going to depend if the markets roll, if Bitcoin rolls down more. If the markets, we have to wait and see. Looking at NVIDIA, again, still weak here. This is forming a really disjointed three-wave pattern. You have your move up, move down, move back up slightly, and now you're selling off again. Your neckline's right at 450. You're at 459. So if you break through this 450, then you need to start looking at 435 as your next level of support. And you're down today 3.36%. So we'll see what happens here. If the markets are going to retrace, then obviously I would expect this to retrace and start working its way down these levels from 458 to 450. Down from 450 to 435, 416. And you have to see that in confluence with the markets actually breaking down and beginning to retrace, which we don't see yet. Tesla down today as well, 2.29%. Tesla's at 238. These levels have stayed the same, guys. Again, we got to our 252 target where I talked about I like the idea of trading here on shorts, and you're still holding your support of 230. So between 230 and 258, you're at 238. Don't see much of a pattern here yet either. So I would want to see this break down below 230 and really start testing these lows, maybe get a nice back test and come back down, because this low down here is at 194. And you could easily see that, obviously, if the markets do decide to top and retrace. Let's go ahead and move forward again. Ferrari went 100% retracement, went all the way down. This is what you love about assets trading at above a 50 PE that are parabolic. Went from 369 to 353, back to 369, and you just made a symmetrical double top at the moment. So this can go either way, but obviously if the markets do start to retrace, then the bias is going to be for this to break down, and you start looking at your neckline here below 353. So we'll see how this plays out as well. Something to track, because I think there's a massive amount of downside, tons of gap fills on Ferrari all the way down on this this is an all-time high for Ferrari, parabolic pump. So keep your eyes on Ferrari, which is race on SimpleFX. If we look at Adobe's earnings are tomorrow, guys. Just be aware of that. Their earnings are finally here tomorrow, or actually they're Wednesday, December 13th. Yeah, Wednesday, December 13th. So it's the same day as the Fed. So that'll be interesting. But you can see we had a nice move up here in Adobe off of our W pattern we've been tracking for weeks and weeks. Adobe got to 628. Retraced all the way down to our fib support at 592. So a nice, $38 move here in Adobe. And now you're back up at 621. And you have to see if this is going to form this lower high for a three-wave top, right? This is the exact type of move you want to see, and see if it holds. Pull a fib here. You touch the 886 at 624. So you want to see if this move holds. And again, if the markets start rolling, that's your tradable move, is that second top, right? If you can't nail the exact top, if it goes past your fib, you miss a trade or whatever, then always look at the second top if it holds, right? It has to hold. If it doesn't hold, takes out this fractal, then you could be looking at a different pattern. So with earnings on Wednesday, I don't keep track of Adobe's earnings, but it's a big AI stock. So with earnings on Wednesday, be prepared for some volatility in the stock. Let's look at Nat Gas. Nat Gas is plummeting. You guys like me to cover some energy. Why are energy stocks or energy as a whole coming way down? Because the economies globally are slowing down. Japan just came off a negative quarter GDP. The UK was 0%. The USA is going from 5% to 1%. Germany is in a negative quarter of GDP, going back into recession. China is going back into recession, or starting a technical recession now, as they like to play it off. So there's less demand for energy. Keep in mind that what's crazy is this decline in prices, given the geopolitical theater that we're living in right now, with I can't say these words, two major military clashes around the world, and energy still tanking, okay? We're going to have a commodity super cycle, by the way, guys, but this is a normal pre-recessionary cycle. Energy tanks due to demand. Energy will tank, and then it will spike back up in recovery, right? That's how you get your commodity super cycles. So just be very well aware of this, because you are so far off the highs right here. $10 was your high, and you're down here at $2.24. Want to see if this holds at 2.14, coming down here. It's a 786 fib from this five-wave pattern I showed you guys last video, and you've had further breakdown from this five-wave pattern. So 2.14 and $2 is essentially where you want to see this hold, or you're going to be coming down to make a new low. So that's something to watch on Nat Gas. If we look at this on oil, same thing. Peak was up at 131. Commodity traders have to be savvy with world events and economics, okay? So you can see oil broke down here. I showed you guys this last video as well. Had a nice Wyckoff trading range, so a little bit of a selling climax, and then your buying climax. And then Oil came down for its reaction, chopped around in here. And what did it do? Tried to make its Livermore pivot, made a three-wave double top, broke down. Trying to hold support here on the 3-day chart, that 71 level. Look for oil if it comes back down below 64, which you need to be really well aware of, whether it comes back up, comes down, makes another lower high, does this. Once it does this, remember these pivots work to the downside too, right? So be well aware of that. If you back test this 64 area, your fractal low, and that fails, oil's going down even more. Now, obviously, if the markets can run up, why would energy be dropping? This is so perplexing to Bloomberg and everybody. But again, guys, it just boils down to the economies around the world are getting weaker. And commodity traders know this, and so they trade accordingly. All right, guys, hope you enjoyed the video. Definitely check out our brand new market maker special report as soon as we get that out on Wednesday. And leave me your comments on this video. I'll get back to them as always. Take care, everybody.